What is up, and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, I am going to be exploring different Bitcoin macro charts and indicators and trying to answer the essential question that I believe is out there for Bitcoin and crypto in general, that have we started a mama bear type of drawback, or is this more of a baby bear type of situation? I'm going to go through some data today that I think will be important to watch and look for, and why I believe that maybe this is a baby bear type situation. So starting off with fear and greed, we can see that fear is sort of bottoming out. We can see fear doesn't really get any lower than this, and it is starting to curl on up. Now, something I will warn or caution you about with the fear and greed is sometimes this can be a leading indicator. We saw fear bottom out in May of 22 when the Bitcoin crypto markets really bottomed in November. And this whole cycle, really, if you're going from the bottom in November of 22 and you're including this fear indicator for that, which I do, then you can see that we've had more than one time where fear has been a leading indicator. In August, it was a 1-to-1 correlation because we had the yen carry trade unwind, and so fear went down with the market. However, in March or April of this year, in 2025, let's go over that. You can see the markets bottomed in April, but this really started with the whole tariff scare. So I would put that more so into the camp of you can even see right there, that was later February before the markets dropped off, that this was more of a leading indicator. So take your bets on whether or not this is a leading or lagging indicator. Now, as I talk about the crypto markets today, I've been talking a lot about the last couple of months, this path to alt season. And currently, this drawback that we're seeing does not follow the normal path that we see with Bitcoin and crypto. And I'll show you what that means in the charts as well. But we are still in phase 2 Ethereum season, and we can show that just by bringing up the Ethereum Bitcoin chart, that Ethereum's value is growing against that of Bitcoin overall, and it is headed in a positive direction for the macro trend. But we haven't gotten our typical alt season yet. And usually when this is a mama bear type of scenario, or at least in the past for Bitcoin, we typically have some sort of an alt season or rotation from capital out of Bitcoin into these alts. But we haven't seen that yet. So I'm right there comparing this. That's one data point. I would be comparing this to maybe like a 2019 style sell-off, what we had right here, where the markets, we had this mid-cycle top. We had this sell-off over time, testing the 100-week moving average like we just did before quantitative easing and everything eventually shot the markets up. Now, I'll also be talking about or referencing the Bitcoin dominance cycle. And Bitcoin dominance, if you've heard of this and you don't know what it means, it's the overall percent of money in the crypto market that is in Bitcoin. So when we take a quick look at Bitcoin dominance, you can see it's at 59%. That means 59% of all money in the crypto market is in Bitcoin. So 59% of all the money is $1.73 trillion. That's the market cap Bitcoin has right now. And I think it's also important to keep in mind, just for simplicity purposes, right now, this chart isn't up to date, but this is maybe going to be a 40% pullback that we just had, or 36%, I think more accurately speaking. But Bitcoin is known to do this. In 2017, when I started my crypto journey, Bitcoin had half a dozen 30 to 40% pullbacks. Could you imagine if that was our crypto market today? I don't think people would be able to survive. Now, this only shows pullbacks within a bull market, so it didn't show the pullbacks here because overall you see the downward direction. These are bear markets, so it's not showing that percent, but this is showing us that even on our way to the top, do expect volatility. Crypto is not for the weak, all right? Crypto is going to do crypto things. And volatility, as I once heard, is vitality for crypto. And that is very true. If you want to experience the euphoria of a 150, a 200K Bitcoin, you're going to have to brace yourself for some intense volatility. That is what crypto has done in the past. Now, going over to some almanac type data, we can see that November overall is the most positive month. However, this month it is shaping up to be negative. No two ways about it. And I do wonder, just looking at the November chart, how much has this November of 2013 skewed the data? So November is typically the number one month, but maybe this data is skewed. And overall this year, after November prints its, final percentage, however much it's down, this year has overall been flat, but slightly positive. And typically when we are getting into an alt season type year, you can see how much Bitcoin starts to go up. So 2021, we had alt season in April, and you can see Bitcoin just starts to go on a tear for a number of months straight, even 2017. So we're not seeing that quite yet. The Fed has said that they may pivot to quantitative easing starting in December. So that would be a headwind, just like last time in 2020, 2021, for some positive price action for more riskier tech assets such as Bitcoin, crypto, and your altcoins. Now, as far as our alt season index, what is curious, referencing that Bitcoin dominance. So Bitcoin dominance, if it's going up, that means the value of Bitcoin is holding up better than that of altcoins. But we're not seeing that right now, which is very curious to me. So this is another data point I add towards the baby bear type scenario, because if it was truly over, what we typically see is altcoins just dying against Bitcoin. Now, Bitcoin has already held up pretty strong here. This giant wick that probably coincided with that largest liquidation event ever, which did rip a lot of altcoins down. But when we zoom in, there's no denying this is an uptrend. We have higher highs, higher lows overall for the altcoin market. So the altcoin market is showing that it's holding up better than Bitcoin. So that's curious. Now, as far as the rainbow chart right here, the logarithmic regression chart, log scale means factors of 10, and regression means it flattens out over time. As far as this chart is concerned, you can see that Bitcoin has gone all the way down in the light green ribbon, which is at around 87K. And if you're looking at that teal ribbon band, that gets to about 68K. And I've said on this channel, if Bitcoin can hold 81 to 85K, let's just go over to the charts and show this quick. I'll do some jumping around back and forth. Let's go to the charts for Bitcoin. You can see that we are at this line. This is the Fibonacci extension, and this is the 100-week moving average, the 200, the 50, the 20. Okay, you guys got it. But we are at this Fib extension. Let me put that up there at the 1.236. It's 81K. So we wicked right to that 1.236. And the weekly is settled at the 100-week moving average. We're going to get more into indicators to see if this is going to regain some strength, some momentum, some positive divergence to hold this level. But make no mistake, if not, you see where that 200-week moving average is and the former all-time high. We would be taking a look right now at like 67 to 68K. So going back to the rainbow chart, it doesn't surprise me that that teal area, 68K, that could be the next area. I'm not here to make predictions for you guys. We just got to take things by levels. And now we are at a certain key level, and we are waiting to see if confirmation, structure, positive strength, divergence, all that will come in. Now, something I did also want to reference is just the phenomena that is Bitcoin and its price action since its inception into the markets. And what you see here, the reason the rainbow chart is such a big thing, some people like it, some people don't. I like it for this simple fact, not for predictions, but for the simple fact it shows that Bitcoin's price has moved within a logarithmic regression. Now, for any of you who don't know about what a logarithmic regression sort of does, is that Right here, we have the y-axis. This is going horizontally and vertically. We have the x-axis. The x-axis is our factors of 10. As you can see, Bitcoin getting there to 100K. Eventually, there would be a 1 million number up there. That's the next 10 factor. And the y-axis is time. Now, Bitcoin has had this phenomenon known as 4-year cycles, where we've had these peaks right around every 4 years. And you could say, well, there was another peak at this 4 years. And so people would say, you know what, it's over, just like before. But I would caution you on that, because even since the beginning, we can see that this log regression doesn't always show 4-year cycles. We do get these double peaks. Last cycle, we had 3 peaks. I'll get into that in a second, but let's just take a look at this. The very first cycle it topped in June of 2011. Then the next cycle, which I consider the top to be the highest point between the halvings. If we're talking about a cycle top, this would be the second cycle. This top between the first and second halving was December 2013. Now that's not 4 years, and that does fit within a log regression that the Y scale, the factor of time, is going to be short, and then it's going to be stretched more and more every cycle. So from 2013 to 2017, that was 4 years, exactly 4 years. And we had that top. I got into crypto the summer of 2017, somewhere down in here, and got to experience all this, even that brutal bear market as well. Now, the next top, many people would argue, was 4 years later. We have December 2017 to November of 21. However, I would argue against this, because we had alt season right here. Now, people will chalk that up to all the quantitative easing and lower rates, all the shenanigans that happened, the stimulus checks after the COVID crash, and that's what pushed the cycle top forward. Who's to say? We'll never know, but we did have alt season earlier, and then we had the classic 4-year top. However, in between these halvings, we did technically have the all-time high happening with this cycle in March of 2024. So when we look between the halvings, the next cycle top, could be argued that was here. And then we recently had this October 25 top. People say, you know what, that's close enough. 3 years, 11 months from this day. November 21 was 3 years, 11 months from this day. 4 years from this. My argument against this, however, is with log regression, we get stretching over the y-axis over time. It stretches further each time. And I'll show you in the charts that when we measure the bottom to the top, that stretches each time. Let's get into this actually pretty quickly here before I move on to some of the current price action data. But we'll just measure this out. When we're going from the bottom to this top, you can see around 750 days. I'm just going to use round numbers. The red lines are the cycle tops. Now here, you can make 2 measurements. This was a double bottom. However, on the charts, it does show that we were slightly lower at this point. And wouldn't you know it, around 850 days. Already right there, bottom to top, we are seeing a stretch. 750 days bottom to top, 850. And wouldn't you know it, this bottom to top, around 1,050. Something interesting is going on. So do you see, we added 100 days, 200 days, 750 to 850, 1,050. And this bottom to top, recently, this October high was right around 1,050 again. So people are saying, you know what, 4-year cycle, that's it. However, logarithmic regression doesn't work that way. It stretches more each time. I'm not here to give you a prediction to say the top will be 1,250, 1,350. If we're adding, 100 to each prior, cycle top each time, we had 750 plus 100, 850 plus 200, 1050 plus 300. You could say, well, that would give us a pattern of July. I'm not here to say any of that, guys. All right. What I am saying, however, is that this log regression, no two ways about it, it stretches horizontally over time. And I think people forget that because we've been lulled to sleep. We've had these tops that have coincidentally been in quarter 4 of the post halving year. You see where the halvings are, you see where these tops are, but that's not always been where alt season has happened. So getting back into Bitcoin, let's take a look at this. Could the top still be coming later this cycle? Well, I can show you on the charts as well as, CoinGlass. They have this great page, the bull market peak indicators. None of these went off. None of them. We didn't get that classic top, where Bitcoin typically gets to. We didn't get to some of the expected areas, maybe the 2618, the 3618, even the rainbow chart when we go by the descending tops. If you're looking at the orange zone, the light orange zone, you'd say, well, the light orange zone, even if we're being conservative, is showing 160 to 200K. We didn't even get that yet, which would be where the next areas are. We can see that reflected with a log regression indicator right here. You can see that's where the zone would be, right between the 2618, 3618. We did get into the lower area of that, so anywhere within that red zone does mean we're overbought. We didn't get any of the classic bubble risk indicators going off as large as they have been before. You see how high those bubbles go. The highest our bubble indicator has gone this cycle since the bottom was in March of 24. Again, technically the high for last cycle between the halvings. So we didn't get any of those. I'd say, as far as one of the maybe best indicators to say that we got close would be something like the ultimate RSI. If we take a look at the ultimate RSI here on the monthly, you can see that it did get quite overbought. However, even if we're comparing these RSI peaks, which isn't always a great strategy, but even if we're comparing, you can see it still fell a little bit short of what was to be expected. So there's a lot of indicators to show that, we didn't quite get to that level that we typically see. This is the pi cycle indicator. You can see that Bitcoin in those peaks gets above that moving average, or the mid cycles get to that upper moving average. You can see right here, the last time we hit it was March. Right now, the pi cycle is just a shade above 200K. So a couple arguments for the 4-year cycle that people have said is, what? Wall Street is involved. We have all these ETFs. Wall Street, they're not going to wait for a 10x. If they have profits and retail's overextended, being too greedy, they will pull the rug. They'll take those profits. And that is true. However, I would point to other stocks like NVIDIA or Palantir. When these things gain momentum, or even Tesla, for example, they can start to shoot up quite nicely. And I don't believe we've gotten into that yet for Bitcoin. We can even see that reflected by the extreme greed areas. We can see March 2014, we peaked up there a little bit later last year, but we never truly got a spike there where we stayed in extreme greed and got some of that euphoria. We didn't really get that so far yet this cycle. Now, going over to the cycle, currently where we are right now, we do see that Bitcoin is at the 100-week moving average. And technically speaking, anytime you break the 50-week moving average, you are bearish. That's a dividing line. But I think too many crypto people equate being bearish or prior patterns to saying, it's over. But I would show you that, here you go. There's under the 50. If we retest the 50 and start falling down again, that's not a good sign. But in 2019, we did get bearish here for a little bit. You see that 2019, we came down to the 100. Now, you can include or choose to exclude the COVID phenomena, what happened, that's up to you. But you can see that Bitcoin did start to range in here. So as I've been seeing this, seeing that, okay, classic bear markets, we get under the 50, we retest and then get rejected. What was different about 2019? One of the different things was the United States central bank balance sheet switching over from quantitative tightening to quantitative easing. Let me take off the moving averages here to make things a little bit easier to watch. Now you see that mid-cycle top happened just before quantitative tightening ended, all right? Again, this is the United States central bank balance sheet. This is what shows QT and QE. quantitative easing was turned on. The economy was still struggling. Then we had COVID. That really tanked things. And then the Fed injected trillions out of thin air. And of course, Bitcoin ripped from there. Now, quantitative tightening has been coming down very slowly. And if we go to the quantitative tightening chart, it'll show you we're at the 100-month moving average. We don't need to get over there now. However, the Fed has been cutting rates. Cracks have started to form in the market. And they've even said, we'll cut by 25 basis points on average unless something's broken in the economy. So unless they're cutting by 50 on average, I would not be concerned quite yet. Even with some of the cracks and negative market things that people love to point out now that we're bearish, but a lot of those cracks and negative factors existed back here and nobody was talking about it yet. People only like bringing up the bad stuff when we're bearish, of course. But the Fed has said that they are looking to switch to quantitative easing, possibly starting in December. So that could be one of those headwinds that would be similar to that of 2019. Now, I also wanted to take a look at some other factors currently and to this 2019 comparison. I did not want to do volatility, actually. I wanted to do strength. Let's do RSI. So the RSI, you can see here in 2019, we did have a little bit of bearishness, but this was able to positively reset and move on up. Now, the thing that we have going on right now with the RSI, you can see that we had this was the elephant in the room for the longest time. We had this triple bearish divergence playing out. And you see where the base of the RSI is going all the way back. We have not been lower than it since the literal bottom in late 22. The RSI is down here now. We have reset and gotten rid of this bearish divergence. So the bear has diverged. And if you don't know what that means, it means higher prices, lower peaks in the strength. We are now oversold. And the RSI has not been this oversold since last cycle bottom, the 2018 bottom, and pretty close in the 2020 bottom. This was COVID. And so when I look at this comparison, I say, wait a second. Remember, the Bitcoin was staying at the 100-week moving average. Let's take COVID even out of the equation a little bit. We just had the overall strength drop through the floor. We are oversold. And yet Bitcoin, it isn't doing a mama bear type of scenario. We are only at the 100. Okay, if you look at just, again, I don't think you can go off this comparison alone, but if you take a look at when the RSI was being oversold, we were dropping the 200-week moving average or getting to and underneath the 200-week moving average. We're all the way down there. And so I have to ask myself, if the strength is resetting and Bitcoin can hold 80K or 85K, that might be pretty good for Bitcoin. This might just be a sort of short-term reset. And the data I've seen out there shows, I should have included in the video, that a lot of the selling is coming more from short-term hodlers, not long-term hodlers. Now, actually, let's go back to this before we get to Bitcoin dominance. I did want to take a look at the MACD. One of the things we need to keep an eye on with the MACD to say, is this a mama bear or a baby bear? We want to see this flip and get back up into positive territory above the zero line. If the MACD falls and by the time we curl up is down here underneath the zero line, I will become more cautious, especially if we start getting down here to the 66K area, 66 to 70K. We'll see, but we got to take this one level at a time. For everyone freaking out about the crypto market, I think it's dangerous to get into prior patterns of thinking because the crypto market does do things differently each time. One of those things that it's doing differently, this is Bitcoin dominance, which I referenced earlier. Remember, Bitcoin dominance, when it is going down, that's good for alts, and altcoins have been holding up well against Bitcoin. But going back to the classic flow of when we have alt season, people are often asking, when alt season, when is it? Well, remember, we don't get alt season until Bitcoin tops, and it's too expensive to keep buying, and then we get massive rotation into large caps and small caps. Ethereum has outperformed Bitcoin for a little bit now, but what we see, even with this negative price action for Bitcoin, look at this overall trend on the MACD. We are negative, which means Bitcoin dominance has a negative divergence going on for it right now. It got rejected by the 50, so it's bearish. It got rejected, and we'll see what happens at the 100. Is it going to blast through it, or are we going to start coiling, possibly go up again? Funny enough, 2019, let's get rid of, we'll keep this on actually. 2019, take a look at this. We can see this is where we last saw negative divergence on the MACD for Bitcoin dominance. And you can see it broke under, at the time, the 200 was the stronger moving average, but it broke under the 50 even, came back up to the 200, came down, and then we had alt season. All right. So I think there's, quantitative easing as far as what Bitcoin dominance is doing, even Bitcoin's price action to the 100-week moving average, as I showed you. I'm seeing more comparisons to a baby bear type scenario than it's over. This cycle is done, kaput, we're finished. I will remind you, that we are in a very secular bull market and we are in an AI bubble. And everyone's saying it's a bubble, but remember, the last time the Shiller PE ratio got to above 40 for a bubble, you can see the date right here. This was early 1999. If you're wondering how much the market had to go after early 99, it had another year to go to the top. Let's go back to 1999 here. Let's find January. Here it is. We had another year and 25% up. And even with the VIX, the volatility, you can see volatility has been higher lately. Look at 1999 to 2000. Look at all this volatility between 20 and 30. That was the average. Today, the VIX has overall been lower, but you see the base, it is climbing. Remember what I said, volatility is vitality. So if the VIX starts keeping these moving averages and chopping up here, that is normal, and that does mean more than likely that we will have longer to go in this bubble. As much as people don't want to believe it, everyone loves to say when price is down for an asset that, there's all these problems with the economy. I agree with you. However, those problems in the economy existed here. They existed here. They existed here. So going over to some of these charts, we have to see, again, just like with Bitcoin, with the 81K area, we need to see total 3. This is the total market cap of altcoins. Hold some of that structure and regain some of that strength, whether it be on the MACD or the RSI. We can see the RSI, it's still going down here. So we need to see positive movement there. We need to see the MACD, the stochastic. These are all good indicators. Yes, they're bottomed out, but they can stay bottom for a while. We want to see confirmation that it's moving up into some of these positive areas right here. The MACD, here you go. So right now, these are negative. There's no two ways about it, but we're looking for structure to hold while negative. Ethereum, Bitcoin, you can see we had negative divergence for a while. ETH, Bitcoin bottom. Now we are in the positive territory. So inverse to Bitcoin dominance, Ethereum, Bitcoin headed into positive territory is a very good thing. All right. This is what we see classically on our way to alt season. This is step one. So again, even going back to 2019, let's compare this 2019. You can see there was positive divergence, but we didn't really get until 2020 when Ethereum, Bitcoin started to be bullish. This has already started to happen sooner than expected. And I do compare this more so even with 2017, some of the market action going on here. We can get alt season very quick from these dumps. So we'll see how long this plays out, whether it's longer, drawn out, quicker, sometime early next year. The large caps, this is another indicator. Look at the MACD showing that we are in positive territory. We are in an 8-year wedge, as crazy as that sounds. And, this could be a bearish argument, but we've seen that, in late 2024, where's March of 24 right here, that we've had these spikes to this 382 fib for the large caps. This is, by the way, this chart I made, it includes XRP, Binance, Solana, Tron, Doge, and Cardano. It's a chart for all those. But we can see this 8-year wedge. If this wedge pops out, that's going to be a very good indicator. And as far as the altcoins in general, others divided by Bitcoin, this is everything, the market cap, everything outside the top 10, outside of Cardano. So that's 12%. all the cryptos compared to the top 10 make up 12% of the total crypto market cap. We see this starting to move up, hold support. Do we see other indicators showing that, maybe we are starting to verge positively? We're pretty close to it. You can see the MACD is wanting to flip up. And the last time the MACD flipped positive from being this close to the zero line or underneath it, you can see how low it usually is. Usually it's down here, but when it's starting to flip positively, January of 21, this is 2019 again. So when we're heading up, you see the MACD, higher lows, higher highs. When it's going this direction and we are flipping positive on it, that tends to be one of the best times to get into alt. So guys, I see higher lows. I see, maybe you could call this a flag, a pennant formation. I'm seeing some possible signs that, instead of calling this, the end of the cycle, that actually we're in more of a 2019 scenario. Let's take a look at Tether dominance. So Tether, this is an inverse relationship with Bitcoin. When Tether dominance is high, this is, 6.2% of all money in crypto is in Tether. Tether always has a value of $1. So when we're risk off, people want to retain their Satoshi value, not lose the value in their cryptos. I think Tether, watch this 6.6% area. Again, the MACD, we want to see this turn around, turn negative. Is there anything on the daily? There's the start of it. We have the light green, but we need a negative flip. We do see a clear rejection there. But I think, Tether dominance, when it gets to this 5.9% area, that's going to be a key area. Is it going to break under the 20, the 382 or not? So anyways, guys, I put out a lot of data out there, and I want you to just, I'm not here to give you a bias one way or the other. If you believe this is big mama bear, that's fine. But I am here to say, as far as the mathematician in me goes, I've been scratching my head on this one saying, what? We know that this log regression stretches the y-axis. We know that every cycle is a little bit different. Why are people obsessed with the 4-year cycle? Because if this was truly the case that we would only do 4-year cycles forever and ever, we wouldn't have a log regression. We would have just a 45-degree line, pretty much. If we only had 4-year cycles moving up, then we wouldn't have this rainbow chart. We would see it just moving up like this. And that's not what we're seeing right now. So the x-axis and the y-axis, if you believe in even the concept of Bitcoin having a logarithmic regression type behavior, then I think you need to at least be a little open-minded to the fact that we could see a top later next year that would fall in line with a bubble type scenario with the quantitative easing argument. Heck, if the Fed starts, handing out $2,000 tariff checks as Trump wants to do, there's a lot of inflationary factors right now. Gold's at a recent all-time high, and when gold starts to come down, that's been positive for crypto markets before. We see gold possibly turning negative here. If it breaks at 50, this could be a headwind for the crypto market too. We've seen this in the past from these points at gold peaks. That's when Bitcoin has done well after the fact. So again, these major gold tops have also been a factor. So I think there's a lot of inflationary factors, and that doesn't change my hypothesis, my thesis for a Bitcoin cycle top. Therefore, if my thesis hasn't changed, why would I all of a sudden turn bearish? Instead, I am taking a look at this market as, this is a nice discount opportunity for crypto assets. If I was bullish here and bullish here, why am I changing that now? All because we got under the 50? My thesis and hypothesis has not changed. So I ask you, how do you make your hypothesis on the crypto markets? If that hasn't changed, then why feel so defeated? And instead, maybe we have a very good discount opportunity. That's how I'm choosing to look at it. I'm letting data and evidence sort of back that up. And, even if Bitcoin got down to 68K, again, as long as some of the other charts and structures hold, if Bitcoin dominance is not going to newer all-time highs, I think that we still have a classic upcoming alt season on the horizon that we have not seen yet. We are still going through this chart. And if the one thing I would say, if Bitcoin dominance all of a sudden turned mega bullish and started getting higher, then I would change my argument and say, you know what? Maybe altcoin behavior is going to be different than ever before. But right now, we have seen Ethereum's positive, Bitcoin dominance is negative. We've seen the comparisons, quantitative easing coming back in, those inflationary pressures, that's positive for the crypto world. I am still bullish macro-wise on Bitcoin. Short term, no, we need to see confirmation and structure hold here. But medium term, yes, I'm still bullish. That has not changed. Anyways, let me know what you think in the comments below. Wanted to really go through a more detailed video for you guys to give you my overall thoughts on the market and just, let you kind of chew on this and decide for yourself. Let me know what you think. Anyways, thank you so much for watching. Have a wonderful day. Take care.